Good morning and welcome, Patriot Radio News Hour. Joe and Jason live on this Thursday. I hope it finds you well. And I will just say this, it did not get off to a good start. Economic data coming in that, well, let's just say Jay Powell did not like, Wall Street did not like. We've got a huge sell-off occurring in Wall Street. Gold and silver, I mean, they're down, but hanging in there. Great opportunities across the board. And again, I think this is going to be one of these things that we've been telling you about, really go all the way back to the word transitory. Go back. We've got all the podcasts. You can listen to them. From the day Jay Powell uttered those words. And we told you, nope, that's not true. This isn't transitory. And that the Fed was way behind, of course. And then we told you, remember, oh, maybe we should retire that word. And we are telling you, the Fed's in trouble here. We're in that box. There's no good answer. Raising rates, don't raise rates. Right? There is no good answer. And the reason there's no good answer is the Federal Reserve put us here. Period. It was called economic idiocracy. Interest rates at 0 for 15 years. Morons. And really, and I say morons. Well, what were they doing? They were trying to save themselves and their system. Every one of those banks, I'm sorry, in 07, 08, they were insolvent. I'm sorry. I wish they weren't. Whose fault was it? I didn't tell them to give out loans to guys making $15 an hour and having them buy 2 and 3 houses. Nobody told them to do liar loans. Remember the liar loans? We'll just fill it in. We'll just fill in a number. You'll be good. It's okay. We'll just tell them you made $100,000. We won't have to show anything. Nobody said for them to do that. They shouldn't be here. And again, think about how much better off we would be. Instead, we have more banks behaving badly. We have a system that right now, as we sit, at least half of the banking institutions have a problem. Of course, which means they all have a problem. I mean, that's just facts. Today, the 10-year note skyrocketing. Of course, we've been warning you about that. I didn't know it happened like this. But the 10-year note, 407, I'll say this. You don't see these gigantic moves in bonds. This is not normal. This is not what they're supposed to be doing. But again, this is why you need to get this gold and silver put away. We've been telling you for decades. And guess what? Been a pretty smart move. If you've been following our advice for decades, you're pretty happy right now. And today, I'm telling you, today's going to be one of those great days to do it. 800-951-0592. AllAmericanGold.com is the website. And Jason, it came with a report today from ADP. Now, normally we get this on a Wednesday, but you remember we had 4th of July. So today we got ADP's jobs number. This is a number for June. We got jobless claims. Tomorrow we'll get the government's June number. But ADP, which all along, their number is always I'll call it a little wild. I'll call ADP is probably the, they're the silver of the precious metal. You know, because silver's kind of wild. ADP's number, it's always kind of wild. But this one really took the cake. ADP coming out and saying a massive 497,000 jobs added in the month of June. Jason, that was more than double the number expected. And again, do I think that's real? Probably not. Does it matter? Absolutely not.
I guess it matters when they make the next rate hike decision. But you're right, it's not that big of a deal. And you were talking central banks, something that I tell people once in a while is, people who love to watch The Godfather, mafia movies, right? Al Capone. I always tell people, what do you think they learned their tactics? And I tell people, it's like, in the 30s, the 20s and the 30s and the 40s, you got the guy in Chicago with the hot dog stand. He has to pay his protection money, right? He has no choice. I tell people, where do you think these guys learned their tactics? The Italian mob. They learned it from central banks who were doing it much earlier. And they tell you how strong the central bank is. What happened to Al Capone? He didn't pay his income tax to the system, and they put him in jail, right, Joe? Because the mafia wasn't paying their share. And then if you want to know why there's no mob now, it's because of that.
There's not a mob boss in the world that isn't jealous of the central bank, right? I mean, the thing that they get, it is incredible. But again, get ready. I've been warned this. I said it. I said it weeks ago. I was wrong. I blame my son. I blame Joe. We have Joey come on every Monday. A month ago. I said to him, Jason, you remember, I asked him the question, where are rates going? Oh, they're going higher, and a lot higher, right? He was warning, and I'm like, what? This is my own flesh and blood saying, yeah, Dad, you're an idiot, man. The rates are going a lot higher. Jason's been in the a lot higher camp. You got me. Just remember, the higher it goes, the higher gold and silver are going. It's that inverse correlation. We'll talk about the jobs number. We'll talk about jobless claims. And we'll talk about what a problem they're causing in the markets when we get back. (800-951-0592). Joe and Jason, Patriot Radio News Hour on this Thursday. And what a Thursday it has been. The markets are really just upended here today on economic data that just means things are going to get a lot more painful here. A quick look in. The Dow's down 500 points right now. The S&P's down 61. The NASDAQ is down 220. Gold, depending on where you're looking, I'll give you the New York and the London pricing because they close at different times, so that's why it's weird. I'll tell you, gold's down 11, right, at $1,915. But in London, gold's down $5. But again, it's really kind of the same thing here. Silver's down 50 cents, $22.62. This market update brought to you by our good friends at Y-Refi. Another reason, right? I know. You had a bad year last year. I know. We know. Right? This is why you got to call Joey. He'll make sure those bad years don't happen. And so far this year, we've been fortunate. Right? Hey, things are hanging in there. And the NASDAQ, look at the NASDAQ. It's doing real good. The next leg down is coming. Maybe you don't want to be, hey, I'm tired of the roller coaster. I'm tired of being all in with my 401ks and my IRAs, and I'll have 2-3 good years, and then bam, they wipe out all my money. I just want something safe and guaranteed rates of return. Well, that's our good friends at Y-Refi, up to 10.25% fixed. Doesn't matter if the Dow's down. Dow can be down 5,000 points. They don't care, right? Too many jobs, not enough jobs. They don't care. InvestYRefi.com. The word invest, the letter Y, REFY.com. Or just call them. 888-Y-REFI-24. Of course, remember, got to have at least $50,000 to invest. That is the minimum. You can use an existing IRA. Some of you can even use a 401k. 888-Y-REFI-24. So, Jason, it all had to do about this ADP number. I mean, 497,000 jobs. I think it's a little messed up. And I'll tell you why. in the West, okay, the West in the South, let's take the West in the South. That's really the economy anymore in the United States, right? The West and the South. That's where all the growth is, right? When you look at, okay, Arizona, right, Colorado, then, of course, you still got California. And I know California's right, but it's still California, right? Texas, Florida, Georgia, the Carolinas, right? This is where the growth is. Well, according to ADP, those two regions only had 79,000 jobs created. The Northeast and the Midwest, the Northeast had half the jobs. I mean, I don't know. I have a Massachusetts flashback, Jason. 250,000 in the Northeast, 162,000 in the Midwest. And even if the number's BS, okay, even if it is, because I think it is, right? But they've always been a little wild. What isn't BS in this number is the wages. So who is ADP? Well, they're a payroll processor, right? So they do payroll for small businesses mostly, right? Because big companies got their own HRs, right, and their own payroll and all that. But that's what they do. So the one thing that'll be accurate, it's going to be that wage number, Jason. Wages red hot again, still up almost 6.5% higher wages. And I think that's really the number we needed to focus in on. More rate hikes coming. I'm all but in now. We're definitely going to get a quarter point at the end of July.
Yeah, you know, I was listening to your numbers that came from that report. It might be mostly true. You know, I know when someone starts a new job, sometimes you have to wait 3 weeks for that first paycheck. You know, Joe, you gotta get into the groove. And if you have to start paying your school loans next month, you might want to start working now so you can get that check in. You know, that might be it, Joe.
And it could be. I think it's just odd the heavy concentration of jobs in the regions where.
Is that where all the colleges are? The colleges are in the Midwest and the East Coast, right?
Maybe that's what it is. Maybe that's what it is. You know, either way, though, you know, whether and again, like I said, I don't think the number is, even though obviously it's a huge number, I don't think that was the big issue here in this, at least not for me. It still had to be wages, which just tell me that we're way, way, way behind. And again, there is no good outcome here. And here's the other problem for everybody, and we're starting to see it now, right? Because think about this. The 10-year note was like, what, 3.6, 3.7 a couple weeks ago? And now we're talking almost 4.1. Gosh, that's almost 0.5%. And they haven't even raised yet. And they're only going to go a quarter. But, Jason, remember, we've been warning people for the last 2 weeks. There's going to be a massive move in the longer-dated maturities because the Fed and the Treasury have been playing games with us. And guess what? The game is over now. All the selling of short-dated maturities coming to an end. I expect this 10-year note, could we be talking, I know it sounds crazy, but 5% or more, and I think that's something everybody better be ready for. And unfortunately, if you didn't hear, you got to listen really, really hard. This is the sound of billions and billions, probably today alone. Another 10 or $20 billion of losses that just happened in these banks. Just happened. And it's all right with commercial real estate. And the fact that now, Jason, who knows, right? We probably had another 10, 20, maybe even $30 billion of commercial real estate no longer going to be viable between now and the end of the year when all this refinancing has to happen.
And I get the feeling somebody knows where the rates will stop going up, right, Joe? So the 10-year note going up does kind of tell me that the rate hikes are probably coming to an end soon. You know, because these guys will buy. These companies, banks, they're going to buy the longer term stuff if they know the rates aren't going up anymore. I'm sure that so-called privileged information is only in the hands of some, right? And so, we'll see that 10-year note go up, I believe. And the rate hikes, I don't know, will it stop at 5.5% or 6%, the Fed funds rate, and then suddenly long-term stuff will look more appetizing, Joe, right? Because you don't want to have anything that's lower than that.
That would be the key, right? The fact of the matter is the banks that don't go under or get consolidated, they would love to buy yields at the highest level. I know it's backwards. The whole thing's backwards. But when bond yields, at some point, bond yields are going to start falling. Listen, when ADP comes out and says, we lost 500,000 jobs, right? That's when buying these higher yields is really going to pay off. But you got to stay in business to get it to be able to pay off for you, right, Jason? I mean, that's kind of the problem.
Yep. And once I think the system as a whole knows that the rates are going to stop going up, then that's when I talk about that reverse repo market. I think the cash starts coming out of there. That's no longer an easy investment. Now there's opportunities out there, right, Joe? Especially if there's more chaos in the markets and there's things crashing and burning. Well, you want to pull that cash out of there and go buy those things, right? I'll go buy the stuff but nothing's completely crashing and burning. There's nowhere to put the money. So it's like I said, it's a slow dragging thing that's going on that is just not exactly what's been going on the last 20 years or so, where you just wait for the rates to drop, right? And then just print. Well, I think the whole print thing is questionable as to when they're going to do it and how they're going to do it. So suddenly there's a lot of thinking that's going on, I think, in the banking system that they didn't have to do before.
Yeah, so the other piece, we did get jobless claims. Now remember, jobless claims were spiking. We were worried. Then last week, some miraculous number. This week, better. I don't know, better. 248,000 people filed for unemployment for the first time. That's not 260. That's not 270. Of course, that's not 230. But 246,000. And that just wasn't high enough. And again, here we go. Right? This is becoming almost ridiculous now. According to the notes, there were two distortions that had boosted claims previously. So remember the last time we got to the 260s, and it was, Massachusetts had fraud, and they went way down. Then we got back. Well, apparently this fraud thing, Ohio and Minnesota apparently were leading to some distortions in these numbers. So, Jason, who knows? Jobless claims, nobody knows, because everybody apparently is having problems with fraud when it comes to unemployment claims. So I guess this number, who knows? Just guess.
The whole system we're in is involved in fraud, so there's always fraud. So not surprising. No, when someone actually says the word, it's almost refreshing, because it's never fraud. It's just it's in the number somewhere, right?
I'm just going to say this: is this where you want your money? Right? We've been tracking jobless claims for decades. This is like, remember over 4th of July, remember you saw the headline, it's the hottest day on earth ever. It was? Well, not really. If you just go back to 1979, apparently we didn't have any weather before 1979, but it's the same kind of nonsense, right? How are you supposed to be able to be a smart investor if every number they come out with, they come out later and just say, there was fraud. That number wasn't true. And Jason, I think he's right. This whole thing is it's a Ponzi scheme. This is what it is. And believe me, the Fed is choking off the money supply. This is not going to end well. Higher rates And a declining money supply is easy economics. You know what's called disaster? Disaster. Below the headlines, Wolf Richter does a great job. Well, guess what? Remember, we've been talking about how much more do we have to talk about commercial real estate? Let me just tell you, this is before today. Okay, so this was before the 10-year note went nuts. Okay? They said after blowing through the pandemic with, nothing more than a little whimper. Think about really, commercial real estate should have been in trouble when everyone had to stop going to the office. You would have thought, right? Right, Jason? Wait a minute. We're telling everyone not to go to work. I work from home. We should have known then. Well, we've got a problem now because commercial real estate continues to show massive, massive problems. Office mortgage spaces now saying that delinquency rates are topping out over 10%. I mean, I don't know how you survive with these types of numbers. But the interesting thing, according to Wolf Richter, is now the pace of office mortgage-backed securities that are going 6 months delinquent, the biggest jump on record. (800-951-0592). Joe and Jason here, Patriot Radio News Hour. This is an incredible opportunity today. We've been around a long time. This company was founded, in 1996? I've been here for 20 years. And we've created just a great company, highly reputable, and very well connected. So we get in on large estates, deal with the courts quite a bit. As you guys could imagine, divorces are messy. Death is messy. You have siblings fighting with each other and making claims and doing these things. And then a lot of times, whether it's the courts themselves, mediators, they reach out to us and say, hey, listen, this just needs to be turned into Federal Reserve notes. The family can't agree, and then the courts will decide who gets what after the fact. And this is one of those days where we're dealing with one of these cases in mediation. We have 100 $20 gold pieces, and we have multiple cases. And right now, some of them are sealed, some of them are not sealed. Silver Eagle cases, but it's all about price. And today is, as an example, gold's down, still down 11. Prices didn't go down today from the wholesalers. They're like, yeah, no, we don't care. Interest rates, I think, all of a sudden now, interest rates over 4% and going higher, back to being good for gold, right, wherever that median is. But I've got these 20s. I'll just tell you, 1 through 9 at $2,095. 10 or more at $2,075. I mean, that's, when we think about where $20 gold pieces have been this year, they've been over $2,400. But this is, you buy 10 or more, you're less than $160 over spot. I mean, that's just insanity in pricing on $20 gold. Take advantage of that. Silver Eagles. Remember when silver got to $22? That was a couple weeks ago. At $22, we were selling cases of silver for $17,000 on sale. 17,000. Well, it's 2270. Okay, so let's just say 2275. Make it simple for me. Well, that would mean 17,750 would be the equivalent price. Nah, not today. Not with this deal. $17,000 for a case. If you buy 3 cases, $16,750. Like I said, we also have some loose rolls. Those are at $700. Same thing. When silver was $22, we were at $700. So, Jason, great opportunity today. It's an unfortunate situation. They happen a lot more today than they used to. I remember when I first started at Patriot, we didn't even deal with one of these. It was like my 3rd year when this happened the first time, and I was talking to Eric. He's like, yeah, he goes, every once in a while. Now it's like 3 times a year we get opportunities like this. But $20 gold, $2,095, 10 or more, $2,075. Cases of Silver Eagles at 17,000. 3 cases or more, 16,750. And then rolls of Silver Eagles at $700. Quantities are limited. So, Jason, when they're gone, they're gone.
Yeah, and I'm not sure about Arizona, but in Colorado, these can be available pretty quick. So if you're somebody that's been sitting on a little bit of cash and just wanting to move that out, this could be done. This could possibly be done for some customers tomorrow in Colorado. And like I said, I can't say for Arizona. But this could be a quick turnaround if you wanted to buy 20s today. We'll get those Silver Eagles. Those take a little longer, but the 20s that we're talking about today, they can be done pretty quickly, Joe.
Yeah, all of this will be quick. Arizona, we'll have them in here next week. Colorado, we're just a little lucky. We keep some extra stock up in our big vault there in Colorado. But 800-951 0592, and it appears we'll see. We knew this would come. At what point were higher rates going to negatively affect what I'll call the paper markets, and all of a sudden higher rates would no longer be considered a negative in the physical markets like gold, like silver? And it looks like today could be one of those days because gold was headed higher early this morning, came off, has been coming back up ever since. And again, you start looking at Wall Street and these higher interest rates really starting to make people nervous, because here's the problem. These banks that have these problems, there's no way out of these problems. Unfortunately, there's no good alternatives. So it's going to be a very, very interesting second half of this year going into next year, Jason, because all of a sudden I think we're back into banking problems. But yet the Fed feeling compelled to still have these higher interest rates. It's one of those storms, again, that we talked about 2 years ago. The Fed was going to be in this box.
Yeah, and it's a slow grind on the average guy trying to make ends meet. You know, because let's face it, the more money you have, if you're one of these rich fat cats on Wall Street, or you're one of these bankers, you can afford to sit there and wait for this thing to develop. But the average guy, Joe, has bills to pay, and those are the guys that have to prop this whole thing up and pay for it in the end. And this is why we try to get our listeners to buy gold and silver, so you can weather the storm, so to speak. And this one's lasting a little while, but just hold on to your hats, because when it goes, it's going to go fast.
Well, let me just tell you, this is not a good one. According to Google Analytics, there's a new trend happening in search. Pawn shops near me. So the search for pawn shop near me has been exploding, according to Google Analytics, over the last 2 months. I think this is kind of this harbinger of things to come, right? The data's still too good, not enough pain. but it looks like it's starting to rear its head. We'll be back after the break. (800-951-0592). Joe and Jason on this Thursday. Just a great opportunity here today. $20 gold pieces, 1 through 9 at $2,095. If that already, which is already a fantastic price, 10 or more. So normally this would be something you do like 50 or more, something like that. No, just 10 or more at $2,075. And then on silver, we've got cases of Silver Eagles at $17,000. If you buy 3 cases or more, $16,750. Individual rolls of Silver Eagles at $700 at 800-951-0592. Continue to add here. This is, believe it or not, and it's kind of odd to think about it this way, but a good day to get into the gold and silver markets, as right now it appears, unfortunately, that the rates that they were hoping for are not going to materialize, that the Federal Reserve has a lot more work to do, and all of a sudden the effects on the economy are going to be far greater. I mean, we think about home sales are already so low, so low. And I mean, mortgage rates were already above 7. And just in the last couple, just since we've only been back 2 days from 4th of July, and the 10-year notes jumped, 3-4 tenths? How soon are we going to be talking about rates above 8%, right? How low can housing numbers get? Jason, it's one of those things where, there's not a lot of inventory, so it's hard because it's like, well, guys, price probably won't be that affected, but at some point or another, right, all of a sudden, there's only going to be a very small percentage of people that can even afford to buy the home. Right? I mean, hey, it's simple math. This is what the mortgage payment's going to be, and people are going, well, I can't afford that.
Yeah, Joe. It's turning into a nation of renters. I mean, before the Federal Reserve came around in 1913, a large majority of the people living in homes owned the homes. There were still renters, but when it came to home ownership, they owned it. There was no mortgage. A mortgage was like a bad word. After the Federal Reserve came around, then suddenly I grew up in the 80s. So did you, Joe, in the 70s, 80s, 90s. And we're kind of a world of mortgagers. You walk down a street, you say, "Oh, look at all these homeowners." Well, no, it's the people that are leasing to buy, so to speak, right? You don't own your home if you have a mortgage, right? Now we're getting to the point now that we're so far down this thing, Joe, that everyone's going to rent. I mean, who's going to buy? The percentage of buyers is going to go down, and I guess it will be owners. It'll be like BlackRock. They'll own all the property. Someone like that, right, Joe?
Yeah, and I think this is going to be one of the new things, right, where they're going to try to convince us that we're still middle class without owning anything. That's going to be the thing. And again, here's the hard part. I mean, according to the data, people are working. People are working. Right? More people working than ever before. And yet no one can buy a house. Right? I mean, no one can buy a house. We're talking about existing home sales getting ready to dip below 4 million annualized. I mean, that's a number. I don't even know. I'd have to look the last time numbers were that low. I mean, this is, we're talking about when 100 million less people lived here that low. It really is hard to imagine that hey, everybody's working and we've got more people working than ever before. I just told you, wages red hot, and yet, Jason, no one can afford it.
Inflation makes it so you can't afford things, and if your wages aren't keeping up with inflation, which I think a lot of wages are not in the last couple of years, then it's once again, it's a slow way to a lower standard of living, and that this is going to keep on happening. This is generationally, Joe. I mean, look at how families used to hand down their assets to the next generation, and then that generation worked to increase the assets of that family, right, and build something. Now it's like, your dad and mom died. Oh, did they leave you anything? Yeah, I got a house that has, half of it's mortgaged out. I'll probably just sell it and use the cash to pay off some of my bills, right, Joe? Nobody's holding gold and silver. Nobody's saving the way that generations before could save to protect their family and their generations beyond. And one of the major reasons our customers buy gold and silver, Joe, is because of what? They want to hand it down to their kids and grandkids.
No, it's a great way to hand wealth down. So much better than having to deal with lawyers and taxes and all those other things. U.S. $20 gold pieces, 1 through 9, $2,095, 10 or more, $2,075. I'm telling you, it's not going to get better than that. Cases of U.S. silver eagles, cases of 500, the green monster box, 17,000. Buy 3 cases or more, $16,750 at 800-951-0592. And you bring up some really hard things, when you start talking about generational wealth and all of it really disappearing. We've known for a long time that mom and dad have been supporting this next generation, and now all of a sudden are we going to be entering a situation where, hey, mom and dad, the bank of mom and dad got tapped out, and now, hey, you're just going to be a renter for the rest of your life. Patriot Radio News Hour, final segment coming up. (800-951-0592). Joe and Jason, Patriot Radio News Hour, wrapping up on this Thursday, where the markets got surprised with a ADP big jobs number, 497,000. Wage inflation continuing to skyrocket. The Dow right now down 475 points. The S&P's down 52. The NASDAQ down almost 200. Gold's down 10 right now, 1916. I think it's down 4, but it doesn't matter. But really kind of unaffected, if you will. Silver down just under 50 cents right now, $22.70. The 10-year note, 407 right now, so squarely back above this 4%. It's never, trying to remember here. I want to say probably late 07, early 08 was the last time a 10-year note was yielding over 4%, with the exception of we got there a couple of times during COVID, and when they started raising rates, couple of times for a day or two. This time, it looks different. This is going to be something where it looks like rates are going to squarely stay above this 4%, Jason, and probably go a lot closer to 5%. And this is, again, for all the reasons we got scared earlier this year. Think about Silicon Valley and Signature Bank and all of these things. This problem didn't go away. And now the fact that 5% Fed funds rate didn't get it done, that it wasn't enough. And and I was wrong. I thought it would be. It wasn't enough. Things are going to get more pain is coming, and the problem is the higher the rates go, Jason, the more pain that's coming.
Right, and we're not sitting in every boardroom in every bank that's having problems. When those first few banks closed earlier this year, you better believe that there's no news coming out about every single bank that's scrambling to fight for survival, Joe. So if we had somebody at every single bank, I wonder what those stories would be, what they'd be telling us, listening to how much panic came as soon as those first, Silicon Valley Bank and the others fell. You better believe that they're working as hard as they can to find better footing, because the cliff is right next to their feet, right?
Yeah, and of course they've been using that bank bailout facility from the Fed, and they get that's at record highs. And tomorrow we're going to get another report. I'm pretty. I'd be shocked if it's anything other than another record, right? Banks borrowing even more money to try to stay afloat. And the problem is with the move on the 10-year note today, Jason, this number only gets worse from here. And that's really the biggest issue is there's no good outcome here when we're dealing with what it is that we're facing with these banks right now. And these higher rates just mean more losses. It's simple math. That's kind of the problem. This is simple math. Listen, I know, you're right. Gold and silver have come down from the highs. This is when you need to buy. Today is the day. I'm pounding the table. Come on, 800-951-0592. Jason and I, we're coming right back with the half-empty cup.